afternoon and hello and welcome to this edition of Markets Tomorrow. I'm Nanta Arai in New Delhi and my colleague Pankaj Podar joining in from Mumbai. Today is a 30-minute special of Markets Tomorrow where we'll try and identify cues for the next day's trading session. Pankaj, this entire week we got a lot of cues from Karnataka.
Absolutely, and that was essentially keeping the markets quite volatile. But today it was not just politics. Let's straight away go to our headlines and see what's happening in the market. So it was not just politics. Macro too gave jitters to the market. Late pullback prompts the triple-digit cut on Sensex. Caution after oil surges $80 barrel a mark. FII fears the fiscal maths to go away if crude stays at elevated levels.
And now that there is a Karnataka Chief Minister who's been sworn in, Yediyurappa, the drama is spilling over to Goa. Congress MLAs to march to the governor's house in what is being seen as a challenge to Manohar Parikar's government. Rahul Gandhi says the BJP is celebrating a hollow victory and all eyes on Yediyurappa on how he is going to stitch all the numbers together to convince the governor that the simple majority is indeed with the BJP.
PSU banks in the spotlight as Finance Minister Piyush Goyal meets top lenders under RBI's prompt corrective action list, assures a support to fix the legacy issue.
And Bajaj Finance rallied to an all-time high after its earnings. The management meanwhile guides for a 27% growth in the balance sheet and expecting it to be secular and across all product categories.
Rap on knuckles for PNB. Regulator SEBI issues a warning letter for violation of certain provisions, says the bank delayed in decision making in certain disclosures to the exchanges.
Reliance Communications and the rest of the ADAG stocks in focus. RCom decides to move NCLAT. Ericsson also informs the appellate tribunal that settlement talks are underway.
HPCL tells ET Now there is a strong case to rationalize the excise on fuel and the retailer will be happy if the government considers it. Meanwhile, large part of under recovery on kerosene and LPG will be borne by the government. Hello and welcome to Markets Tomorrow. We saw what was making news, what's the headline. Now let's go into micros of those particular news flow. Let's first start with the markets as always. Markets in the end did see a bit of decline coming in. In fact, towards the last 30 minutes, you saw extended sell-off coming on the Nifty. You can call it crude, you can call it the political issues. And I'm just if you could look at that downward trail on the last part of the chart, and that's the thing that I'm talking about. Sensex about 0.6% down. Let's look at the broader market space. There was some amount of relief over there. One can say that, you did not see a massive sort of a cut down as we've been seeing earlier. That's the small cap index, which is up about 1% or so, and the mid cap index did well. But clearly, the start of the day was Bajaj Finance. They spoke about their results. They declared their numbers, and the stock was as up at 8% or so. Remember, it's not a small stock. It's a 1.2 lakh crore company right now in today's closing. So it's not a small stock, and that's essentially, what's the key that drove the markets today or restricted the float. But the weightage of Bajaj Finance is very, very low. In fact, let's talk more about sell-off. Let's go across to my colleague Ajay. He's standing by. Ajay, why do you think the sell-off happened today?
Well, there was a sudden crack in the markets in the last hour of trade. Almost 100 points shaved off from the Nifty in the last 35-40 minutes alone. Bank Nifty too took a big knock. Thankfully, the broader markets did not succumb into the same kind of pressure. Small caps and mid caps are relatively resilient, but at the same time, they have actually been, facing the worst of the carnage in the last one and a half months. So they were relatively resilient. But the big worry which gripped the market today in the last hour of trade was that the crude oil prices have gone beyond the $80 mark. So this is the first time since November 2014 that we are looking at crude oil prices surging beyond $80. This is a big worry not only for the market but also for the economy. The macros have come under severe pressure in the last couple of days, and traders are spooked about it. When earnings are improving, demand is coming back rural on the urban side as well. But macros like rupee continues to be weak, yields are hardening, and now the crude prices are gone beyond $80. So all the fears are coming alive for the street, and that is the reason there was sudden caution which set in into the market in the last hour of trade today.
So those are all the triggers at play for the kind of sell-off that you did see in the last 60-odd minutes, which got intensified in the last 30 minutes. Let me take forward this conversation with CK Narayan. Hi, CK. Clearly volatility is the name of the game. What did you make of the charts? And more importantly, can you share with our viewers, now today is over, tomorrow, what is it that they need to keep in mind on opening bell?
Well, I think the Nifty as well as the Bank Nifty have retreated a decent amount. Bank Nifty was trading almost close to 27,000, and as was the Nifty very near 11,000. Now they have both peeled back roughly about 300 points on Nifty and nearly 400 points on the Bank Nifty. I think that is a fair amount of correction that you have seen, and prices are, I believe, back into some sort of support zone as far as the indices are concerned. Unless we see some sort of negative news flow appear on the horizon, I don't believe they'll break these lows by any significant margin tomorrow. And the other telling point at this juncture is that both the small cap and mid cap indices today finished in the green. Now this is happening after a long hiatus wherein both these areas of the market were under considerable pressure, and the very fact that on a down day of the market these two indices are finishing in the green would probably tell us that the broader market is now ready to ease off on the selling, and perhaps that being the main pain point for most of the traders. If that gets relieved to a certain extent, I think buying will come back into the mid-cap area in the futures as well as into the large caps, and that might stem the falling tide a bit and take the markets up again. So I would suggest that people retain their bullish bias at the current juncture. Set a stop a couple of 100 points beneath the lows that we have seen today and still look for stocks to buy into.
Your top picks after today's close?
Well, I think a great price movement, price action today by Petronet LNG, and since that came at the end of a decline and the stock finished pretty much near at the top of the day's range, I think there should be continued spillover of momentum into tomorrow. So Petronet LNG is a buy in the price range of about 219 to 216. We can maintain a 2-3 rupees stop loss beneath our average acquisition price, and a short-term price target here between 225 to 230. Since the market is not such a gung-ho mood, I would match this up with a short position also. And the short I'm suggesting is in GSFC. I think somewhere the market has read the results, which optically seem to be quite okay, but there has to be some fine print in it which has made the market a little negative on the stock, finished about 6-7% lower. And with a weak finish, I think that should be further pushed to the downside, perhaps a dip down to about 115. So short GSFC, 122 to 124, stop loss 127.
Okay, CK, thanks so much for joining us with your trading ideas for tomorrow's trading sessions. That's all you need to watch out for come Friday. And at 4:30 p.m. we'll also decode oil, which is on the boil, and for the first time zoomed past $80 to a barrel, a level we've not seen since 2014. That's disastrous for the macroeconomy, the current account deficit. You did see the oil and gas pack very much in focus today. We'll get to all of that in just a bit.
Let's focus on some stocks as well, and earnings season seemed to be in full force. Nestle declared its numbers last week, but it's a management that you rarely see on TV. The stock is at a lifetime high. We spoke to the management. Let's listen in.
I think it's ultimately the team, the partners, the distributors, and everybody else who has made the results happen. I think it's been a very satisfying first quarter. Normally you would expect one or two categories to give us the growth, but this has been a growth across categories. So milks and nutrition has grown, Maggi and the whole prepared food portfolio has also grown, chocolates and confectionery has grown, and also the coffee and beverages as well has grown, and grown in volume terms. And I think that volume increase together with the new launches and new products that we have put out into the market has led to this happy results that we have had to report for the first quarter.
I also have to ask you about that sensational headline in recent times, Nestle paying a lot of money, over $7 billion to sell Starbucks products across the world. Does India feature in that plan?
There is clearly a global understanding for the sale of the portion coffees in retail and also the out-of-home, the food service packs. This is what the announcement has been. Let us watch and wait the space.
I cannot believe your parent has not told you where India features in. You're a very important market for them.
Well, parent has announced the birth of the New Deal. And I believe that, as you might have read also, Nayanthara, that the deal is to be fully consummated by the end of this year. So therefore, let's watch this space, and I'm sure we will have numerous interactions when we will share with you.
There's no doubt that you have also benefited from deflation of food articles. You have seen input prices go down. Look how milk is doing at the moment. How that must have been a big contributor for the good results as well.
No, sure, Nayanthara. I think a benign commodity space price has together with scale benefits, because coming out of the Maggi issue, we have increased our volume now, and I think the advantages of scale also play into it. Part of the margin, of course, is also because of the base effect, as you know, in GST. Because of the lower base effect, that also has contributed to the overall spread as far as the profitability is concerned.
You mentioned the GST effects. I have to ask you this because we've all read about the fact that how Nestle and a couple of other FMCG companies have been hauled up by the government. Notices have been sent out for denying benefits of the lower GST to consumers. Checks apparently have been submitted. Where does this entire controversy stand, and why didn't you pass on the benefit to your consumers more importantly?
Well, Nayanthara, as far as the word hauled up is concerned, I'm sorry, but it is nowhere near being hauled up. The discussions that we have had with the Anti-Profiteering Authority have been extremely cordial, extremely professional, extremely candid, and extremely transparent. There is no question of an issue of a notice or any kind of misdemeanor that has been done. This was a discussion around how GST benefits have been passed on. We were committed, and we were one of the first companies to announce it, that we are committed to passing on the benefits of GST down the stream.
Aggregate growth has been 40%. So you should look at the consolidated numbers. Consumer lending grew 44%. SME grew 19%. It's been in the early teens given DeMon and GST. For the first time in the last 4 quarters, it inched closer to 20%. It ended at 19%. Commercial lending grew 57%. Rural is 100% growth, albeit on a low base. So overall, it's been well-rounded growth across growth drivers, across risk matrix, across management of OPEX for us as a company. In general, our guidance has been a 25% balance sheet growth and a 20% net income growth. Given the strong momentum that we are entering the year with, I would say I would up that from 25% to 27% for full year, and a 22-23% net income growth is what I would say we are reasonably confident of. Subject to macros. I think micro is strong. Macros are a little volatile at this juncture given where various macros are. But we should be able to, given that in general we are a micro-focused company, I think we should be much better placed. While we may have grown very well as a company, the overall balance sheet is only 1% of the bank credit. I think bank credit ended with 84 lakh crores. We are ended at 84,000 crore. We see opportunity in every part of the 24-25 lines of businesses that we're in. So we've invested very deeply in the product suite, in geography. We've added close to 300 branches in the last 15 months. So whether in terms of product suite or on geographic distribution, we've invested very deeply over the last 18-24 months. And that's ensuring that we can continue to pick and choose credit without compromising growth in any given manner. So it's a culmination of various things that management has been focused on, that's ensuring that as we get to the next fiscal, we are on a more stronger note.
Urban growth has been very steady, but in the last quarter we have seen shade better in the rural growth, and especially I would say the east and north has picked up a little better when compared to the west, and overall growth in the rural, what we saw in the last quarter is expected to be there steady, and growth has been little better than urban is what I can say.
That was, of course, all the buzzing managements today. Nestle was hit a lifetime high. You had Bajaj Finance, of course, up 8%, and Jyoti Laboratories was up 20% by the time or the end of the day. Let's focus on Bajaj Auto. This will be a company that will declare numbers tomorrow. Another Bajaj Group company. You have revenues which are expected to grow 36%, 6,650 crores, and you have PAT which is expected at 1,047 crores. EBITDA 1,306. That's an increase of around 40%, and margins are seen close to about 19.6 odd percent as far as margins go. In terms of revenue, it's expected that average selling price would tend to go up, or volume number is already something that we have. But the management commentary on what's the demand like, especially in the new launches, which are the new launches that can drive growth, will particularly be important. It's I mean, Hero has declared, TVS has declared, Eicher has declared, and now this is the only one among the listed space in the two-wheeler pack which is yet to declare. So they will also be declaring their numbers tomorrow. Let's also look at Ashok Leyland. Karunya is now joining us. Karunya, what to expect from Ashok Leyland?
Well, good numbers are expected from Ashok Leyland this time around. We're looking at revenue growth in the excess of 33%. Profits could be also coming in at 640 odd crore rupees, again indicating a 30% plus uptick there. EBITDA looks phenomenally good this time around. We could see a growth of 48% almost, coming in at 1,778 crore rupees. Margins also likely to expand 12.2% versus 11% is what we're expecting. Now, we've seen very strong volumes across the board when it comes to the CV space, and that is what will aid the top line growth this time around. Higher contribution from greater capacity vehicles which are more than 25 tons. Those have aided the ASPs and the realizations as well. So expect good revenue growth on back of that. And there's also been a price hike as far as the CV space goes, and that is also something likely to augur well and translate good revenue growth for the company. Operating leverage benefits and lower discounting trend. We've seen the discounting has been rolled back now, which was going on in the large part of last year. That is also something likely to augur well for the company and aid the margin expansion. Now, what we need to essentially watch out for in the management commentary is the fact that what the discounting trends will be going ahead, how the demand is in the CV space, what has been the performance of their exports business, their LCVs, the defense business, RM cost guidance, and lastly capex is something that one needs to watch out for in the management commentary.
So stay tuned to ET now. That's what the market expectations are from Ashok Leyland. Thanks, Karunya, for joining us. With that, moving on, we had a conversation earlier in the day with HPCL. We decided to get HPCL on the channel with crude breaching 4-year highs. After that interview, in fact, we saw Brent cross $80 for the first time since November 2014. So it turned out to be a very timely time for that interaction. A lot of key headlines actually coming out of that interview with M.K. Surana of HPCL. As far as high crude oil prices go, once again, you see this oil marketing company make a pitch for a cut in excise duty. But the market has been seeking clarity on who is going to bear the losses of selling subsidized LPG and kerosene. HPCL tells us, at least for now, a large chunk of it will be borne by the government.
Taxation is a government subject which includes both the central government as well as the state governments, because MS, HSD, ATF, crude and natural gas are not under the GST regime right now, and any possibility of considering a reduction in taxes will be helpful to the consumers. So as a companies, we will be happy if government was to consider any reduction in the taxation. But it is subject of the government and it would not be appropriate for me to the comment on what should be the possibility. But on a longer term, bringing these products under GST can be one solution. Of course, there are also, we need to see that what is the level of GST will be there are the state revenues involved, all.
That was the management at HPCL talking what's the way forward. That's it as far as the team of Markets Tomorrow is concerned. We're taking a break. We're back in 2 minutes.